Markets, Nigeria's refining ambitions are back in focus as the NNPC Limited is facing scrutiny over crude supply shortfalls to the Dangote refinery. The development raises fresh concerns about, feedstock security. Joining me now to unpack this, we have Dr. Foma Wokolos, the Vice President, Research at Financial Derivatives Company. Great to have you on the show, ma. Good morning.
Good morning, Laddie. Thank you for having me.
Fantastic. I don't know when last you bought fuel. But I bought yesterday, and yeah, it wasn't funny, at all, seeing how much I had to spend, to get, I couldn't even get full tank, at this point. And now we're talking about feedstock. What's really behind the crude supply gap, from the NNPC Limited, to the Dangote refinery? Is it production constraints, commercial disagreements, or policy misalignment? What are we dealing with here?
So I'll say that what we are seeing right now, what is playing out is not policy disagreement or whatever. I think it's production constraint because after the agreement was reached for a Naira for crude deal between Dangote and NNPC have not been able to meet up with the commitment. And between October, I think 2025 and mid-March, we have a shortfall of about a quarter of the requirements. They have been able to provide like a quarter of the requirement, having a shortfall of over 74%. So I think what is playing out here is the production constraint one. Also, you know that crude oil is pre-sold. We have like a forward sales. If NNPC had done like a forward sales in the international market before now, it's going to affect its supply to Dangote. Then also another thing is the creeks economics. Of course, we know we cannot rule that out. The creeks economy simply means an illegal activity within the production of this crude oil. So once the price of oil becomes high, like we're seeing the global market selling for 100 and something. So the creeks economy, they make more money. So it's an incentive for more thefts and vandalization. Like we saw in January, production rose to about 1.4 million barrels per day. And in February, we are seeing a different story. It declined to a 1.3 million barrels per day. So that's a huge decline. And this is only because of the, I call it creeks economics going on right there. Of course, when oil prices were lower, the activities will be lower because per liter, let's say for instance, in the creeks economy, a barrel of, a liter, how do I put it? Oil price could be sold for, the vandalized or stolen oil could be sold for as low as $30 per barrel. But once there's an increase, you see that the margin will also increase. They can be going for like $80 per barrel. So this will give them incentive to even steal more and to vandalize more. So production becomes low. And I think that's where NNPC is having the challenge to supply Dangote as much as it needs. So what Dangote is doing presently is to augment for oil from outside, that is import. And once the import, this is also feeding into the price of PMS that we are seeing today. Like you mentioned earlier, getting a liter of PMS right now is well above 1,300 naira that we see. And also diesel is well over 1,800 naira. So it's really choking right now. And I think it's a production constraint.
Yeah, I guess at this point, the right balance to say is he choke yes, at this point. All right, so definitely when we heard about the crude for Naira deal, most of us in our minds, okay, fantastic, this is what we need, at this point. He doesn't need to go and source dollar. That's the Dangote refinery, does not need to go and source dollar. So we expected there won't be issues, when it comes to getting feedstock, as long as you can pay for it in Naira. But what we're seeing now is they cannot supply the refinery with the oil that it needs, at this point. So I guess that takes us back to the basics at this point. They have to import to augment the feedstock, at this point.
Exactly.
So that means they have to go and source dollar to make this happen. They have to go to the international market. So we're back at square one, at this point.
Exactly.
So what are we seeing? What are you expecting going forward? Because this is definitely going to impact inflation. Everyone's bracing for inflation numbers for March. And I'm sure you already have your projections, at this point. What are you seeing?
Well, I'll say that the Naira for Crude deal was, we looked forward to it thinking that it's going to be a deal that is sustainable. But from what we are seeing, if you see Naira has continued to depreciate. And I think there's much pressure in the FX market right now because people are sourcing for dollar for importation, and the gross reserve has also continued to decline, is below $50 billion as we speak. So I think the CBN is trying to cushion this effect. And we have a buffer as it is. I don't think that the Naira is going to fall off the cliff because we have enough buffer from the CBN. But be it as it may, the consequences is that we are going to see inflationary pressure in the month of March going forward. And it's not particular to Nigeria alone. Every country is experiencing this squeeze that we are seeing. And I know that it's going to impact more. It's going to have a cascading effect on the economy, even though the government is getting the revenue because of the increase. But let's not forget that if government has done like a pre-sold before now, the oil hike, we are going to be out of the revenue. But if government is doing its sales right now, we are going to be in the revenue. But however, inflation numbers are going to spike. If you look at inflation token factors, you see that they are beginning to reverse themselves upward, which is one of them is the PMS price. It's gone up over 60%. And transportation fare too have gone up over 33%. So, and this will impact logistic costs. And what logistic costs is impacted, inflation is imminent. So
Right.
we are waiting for March inflation numbers. It will be well above 15%. I think that is what we should be expecting.
I guess we're all expecting it to be a dramatic number. That's the March inflation number. But definitely, once inflation goes up, I guess what we expect from the MPC is to hike rates. At this point to rein in inflation. But I'm wondering what to do. At this point when you see this inflation is being stoked by energy prices, and you come in there again and raise rates, it looks like it's not the right move, at this point to increase interest rates. What do you think the MPC or most of these central bankers, what else do they have?
Yes, it's not particular to Nigerian CBN alone. Central banks globally, even Bank of England held rates, Fed Reserve held rates, banks are holding rates, and some are even increasing interest rate. The only measure that the CBN can use to curb inflation is by mopping up liquidity. And they can do that by increasing treasury bills so that people can invest. It can be through increasing the CRR so that we have lesser money in circulation. It can be through sales of OMO, which you just mentioned earlier. It can also be through interest rate hike. But before the CBN will decide to do a hike, it will first of all look at the trend of inflation. The next meeting will be in May. So we have March inflation, April inflation. So once they see the trend, if the trend continues, and I think they may decide to hike interest rates. And I think we may now, the fiscal policy may now come in at this point. So we may have there should be a handshake between the monetary and fiscal policy, because monetary policy alone cannot do this. A fiscal policy should be there to cushion the effect of the monetary policy on the masses and on the economy. So a policy hike is dependent of these two rates that we are expecting, inflation rates that we're expecting for March and for April. Then for May, we'll wait to see what the MPC decision will be.
I guess at this point, if fiscal policy doesn't work, monetary policy doesn't work, maybe we'll look for spiritual policy at this point. Well, thank you so much. It was great having you, Dr. Efoma Wokolo, Vice President, Head of Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.
All right, we'll take a break now. When we come back, definitely navigating this market's not easy. Where do you invest, at this point? That's next on Business Morning. Just stay with us.